Bitcoin just did something it hasn't done in 847 days. And what happens next could change everything. Because for the first time in history, one of the world's largest traditional banks just publicly admitted what Bitcoin holders have known all along. This isn't speculation. This isn't rumor. This is a seismic shift in the financial world that nobody saw coming. What just happened? Let me paint you the picture. JP Morgan Chase, yes, that JP Morgan, the same institution whose CEO Jamie Dimon called Bitcoin a fraud back in 2017, just released an internal memo that's now making waves across every trading floor from Wall Street to Singapore. The memo admits that Bitcoin's decentralized nature, scarcity model, and resistance to inflation make it a legitimate store of value. But here's the kicker, they're not just admitting it. They're actively pivoting their entire digital asset strategy. Quote, "The decentralized architecture and fixed supply mechanism of Bitcoin present a compelling alternative to traditional fiat systems in an era of unprecedented monetary expansion." JP Morgan Internal Strategy Memo, November 2025. The numbers don't lie. Institutional Bitcoin holdings have exploded by 347% year-over-year. Major banks now hold over $892 billion in crypto assets. Trading volume on institutional platforms has surged 523%, and perhaps most telling, 68% of major financial institutions now have dedicated crypto divisions. To understand why this matters, we need to look at how we got here. The relationship between Bitcoin and traditional banking has been nothing short of a dramatic saga, full of denial, resistance, acceptance, and now, full embrace. The regulatory earthquake. But wait, there's more to this story. This admission didn't happen in a vacuum. Behind closed doors, regulatory frameworks have been shifting dramatically. The SEC's recent stance, the European Union's MiCA regulations, and now traditional banks publicly supporting Bitcoin, this is a coordinated transformation of the entire financial system. Key regulatory shifts in 2025. SEC dropping enforcement actions against spot Bitcoin products. European Central Bank acknowledging Bitcoin as legitimate asset class. G20 nations coordinating on crypto-friendly frameworks. Banking regulations now permitting Bitcoin custody services. Tax clarity provided for institutional crypto holdings. Cross-border Bitcoin transactions getting regulatory approval. What this means for Bitcoin price. Analysts are now revising their Bitcoin price targets upward across the board. Conservative estimates from traditional finance institutions range from $150,000 to $200,000 by end of 2025. More aggressive crypto-native analysts are calling for $250,000 to $500,000 within 18 months. The median prediction sits at around $180,000, representing a potential 140% gain from current levels. The market dynamics are shifting fundamentally. What we're seeing now versus what was happening just 24 months ago is like comparing two different universes. Your action plan. Okay, so we've covered the what and the why. Now let's talk about the most important part, what you should do with this information. Whether you're a Bitcoin maximalist who's been holding since 2015 or someone who's just now getting curious about crypto, this changes your strategy. Building a solid Bitcoin position in this new institutional era requires a strategic, step-by-step approach. Don't rush. Don't FOMO. Follow this proven framework that the smart money is using right now. Quote, in 20 years, people will look back at 2025 as the year institutional adoption went mainstream. Those who position themselves correctly during this shift will be tomorrow's wealth builders. Michael Saylor, MicroStrategy CEO. The altcoin ripple effect. Now here's something most people aren't talking about yet, but you need to know. When Bitcoin gets institutional validation like this, it doesn't just affect BTC. The entire crypto market enters a new phase. Ethereum, Solana, Chainlink, all the solid projects with real utility start getting second looks from these same institutions. We're potentially looking at the beginning of the greatest altcoin season in history. The altcoin market metrics are already starting to flash green. Ethereum ETF inflows up 289% month-over-month. Layer 2 solution adoption growing 445% year-over-year. DeFi total value locked surging to $128 billion. Smart contract transactions hitting 2.8 million per day across major chains. The other side of the coin. Look, I have to be real with you. While this news is incredibly bullish, we can't ignore the risks. Bitcoin is still volatile. Regulations could still throw curveballs. Macroeconomic conditions matter. And just because one major bank admits Bitcoin was right doesn't mean the journey from here is straight up. Expect volatility. Expect pullbacks. Expect moments of fear, uncertainty, and doubt. Key risks to monitor. Regulatory changes in major jurisdictions can impact price. Macroeconomic recession could trigger risk-off selling. Technical resistance levels at $98,000 and $105,000 need breaking. Institutional selling could create temporary dips. Altcoin rallies sometimes correlate with Bitcoin corrections. Black swan events remain possible in crypto markets. The bottom line. What this really means. We are witnessing history. The moment traditional finance admits Bitcoin was right all along. This isn't just another news cycle. This is the tipping point we've been waiting for. When the largest institutions that spent years fighting Bitcoin finally capitulate and admit they were wrong, that's when the real bull market begins. Not the retail-driven frenzy of 2021, but a sustained, institutional-backed bull run that could last years, not months. So here's my final take. Whether you own Bitcoin or not, whether you believe in crypto or think it's all speculation, this moment matters. The admission from JP Morgan isn't just about one bank. It's about the entire financial establishment acknowledging that decentralized money, scarce digital assets, and blockchain technology are here to stay. The question isn't if anymore. It's how fast adoption accelerates from here. Thanks for watching Coin Pulse. Feel the market beat.